Hello, this is Rhonda again coming to you with another trading video on support and resistance, and I'm just going to get right into it. First, I want to disclaim that I am not an expert on trading, neither am I a professional trader. So anything that I have to share is fully my opinion on trading, so you'll be trading at your own risk if you use any of my suggestions. So I advise you to be very cautious in your trading. And one of the things that I want to say before I go any further is, with trading, you have to be very, very patient with your trading. You cannot trade if you have bills on your mind, how much money you need and things like that. That can cause you to actually place trades based on thirst rather than skill. So when you're trading, just focus only on skill. With that being said, I will get into this strategy. So I've cleared off my chart to where there's nothing here, no indicators of any kind, just pure price action. But we do have we have a lot of areas that what I've talked about in the past of support and resistance. So if we're on the down, we're going down, right? And this is resistance, this is resistance, and this is resistance as well. I like to use the wicks of the red candles, because when price crosses over the red candles is very important. And when price crosses below, going down for the sell, below the green wick, then it tells me a lot as well. It gives me indication of what price may do next, and I say may very strongly, but anyway. So this next strategy that I want to show you about, I have other strategies in my previous videos that are really good. Bullish and bearish engulfing candles are really, really good indicators of price change as well. So with all of that being said, I'm gonna discuss wick over wick strategy. Okay, so when you're going down, you gotta remove all these lines. When you're going down, okay, and then you get to where you have candles that have wick on the top and wick on the bottom. Most every candle will do this, but when you're selling, I have it on my chart set to red candles for my selling. Okay, so this I wouldn't necessarily use for, yes I would. When you're selling, you want the lowest wick of the previous candle next to the following red candle. You want the highest wick of that following candle. Okay. But this candle has so much momentum on it, and it closed below. You see these dots right here? These are actually support and resistance. These are indications of support and resistance as well. I can show you that. See, this is just a quick sidebar. Support and resistance right here. Got one right here. Let's see, place them right. This right there. See, resistance. We'll do another one. So many ways to find support and resistance. Support, resistance, resistance, support right here. So many ways that you can find support and resistance, but this next strategy I want to talk about is wick over wick. Okay, so I'm going down. I see the price is going down and I have these red candles here. So what you want when you're going down is your first candle, you want to be the lowest, and then the highest, the high of the second candle. Okay, the low of the first and the high of the second. So with that being said, price broke and closed below this support and resistance line. Then it became a sell for the next candle. Okay, price went up and then broke above and closed above with momentum above this support and resistance. The next candle was a buy, stating that price would remain or close above this level. Price then came back with momentum. I mean, a lot of action in this candle, and closed below this support and resistance line. The next candle was a sell. Then price came back and broke and closed above this line right here. The next candle was a sell. It came back through and closed, but the reason why I did that was because it did not close, first of all, above here, which was not above here. You got this area did not close above, but it tested it. It tested this area and this area. It tested here, and this area definitely did not close above. So this candle right here is what I'm talking about. This candle, this green candle, did not go to this point, neither did it close above it. So the next candle was of sell with momentum. This is a candle of momentum. This candle came with momentum as well. How did I know that this candle would come back through? And I didn't know that. But when you are trading in a market that is selling, you focus mostly on sells until you are given indication that price is going to move to the upside. And right here, we don't have that indication. In order for us to have that indication, we would need a higher high. We would need to see structure making higher highs and higher lows. Right now, we have structure making lower lows. This low is lower than this low. This high is lower than this high. So we're having lower highs and lower lows. Lower high than this high and lower lows than this low. So we're still creating lower lows and lower highs. Lower low and a lower high. So right here was our first higher low. So, but we're over here. So you should only be looking for sells. So with that being said, this trade that I said that stayed a buy to stay above, I stated that because this candle right here, when this candle broke through and this candle resisted this line, when this candle broke through, this candle I believed was to be a buy to stay above this line right here. Then when this candle came and broke through it and closed below, I believe this candle would have stayed below this point. But then you have this that happens. When price finally comes back to this area, it goes from here all the way to here and closes above. So there's no, this is where you wait. Once it closes above, you wait for a retest. This was a retest right here. You wait for a retest. If you had waited, you would have seen that price would have gone straight through and would have not returned to this area. It would have just focused on this area right here. So once this wick was created, I would have placed a buy. Even though I say you focus only on sell, it's just an understanding that I have that price would have remained above this point. Just like with this candle right here, price was destined to remain above this area right here, in my opinion. Once this candle closed above this level, this candle I would have stated would have closed above this level. To me, my understanding, the wicks are support and resistance. That's just me. But so with that being said, and the reason why I say the wicks are support and resistance is on an upper or higher time frame. This is actually price action at a key level. On a higher time frame, this point right here would look like this. This is a line. This would look like this right here. On a higher time frame, like on the monthly. This is daily. On the weekly time frame, this would look like this. This would look like the point, because you would see where price went, sold all the way down, and then you would see buy candles open and sell back up to this point right here, thus creating that little peak thing. So getting back to where I was, so when price comes back with momentum and break through this area from all the way down from this support and resistance line, then you would want to wait to see what this candle does. This candle approached this area but did not go to it. It approached it with momentum. So it stood the chance of buying up, but it didn't. It sold down. So this would be a candle to watch to see what price actually does. So it went, broke up, closed above, came back, broke down, closed below. Next candle, I would have been in on this trade as a sell right here. This is support and resistance. This is support and resistance. This candle is acting this at this point in price. This line is support. This candle closes and breaks through, but see here again, this is the reason why you wait the next candle to see what the next candle does, because this one comes back and closes above. That's where you take your next trade as the buy again, because it comes back and becomes support again. You know, it could have come back to be resistance. So if I would have taken this trade right here for support, I would have stated that price would remain not above this line, but I would have stated, gone back, I honestly would have gone back to a previous time period and state that price would remain above this area right here, because that's a lower line, and this is the next support and resistance to this one. So I always like to go one support and resistance area below or above the one that I'm looking at or making my judgment off of. So we're back here. And price, and see how close it came, but it did not get to it or go below it. So I would have been safer here if this were a area of strike on the Nadex platform. So price then came back and broke through again. That's when I would have taken another trade for a sell. It went through, closed above, remained support, went through, closed below, became resistance. I would have taken a trade, placing it, stating that price would remain below. I would have stated price would remain below this point, but it stayed below this point. So this next trade came and tested this area with it, when it went all the way down to this area, this remained resistance. But then in this next trade, it came back through and broke and closed above again. But with selling pressure, I would have taken a sell, stating that price would remain below this point right here. At the lowest, below this point. So that little itty bitty piece of wick right there, below that point. So price didn't even come close to it. But that's just the way I would have seen it. Placing sells instead of buys. But because we have a pin bar right here, a spinning top right here, this is price indication of price change. You have a big old long pin bar right here, another pin bar right here, or is that hammer? No, that's not hammer, but anyway, there are candlesticks that indicate price change in price and direction. Okay. Oh yeah, and another reason why I would have taken this as a buy is because this, not only was there bullish pressure strongly in this area, this candle engulfed previously this red candle. So it was definitely to be a sell, but a buy as well. Okay, and this is an inside candle right here. Well, that's for another video. So you have 1, 2, 3 candles that are signals for price change. So 1, 2, 3. So I definitely, when this trade went up to be a buy, I would have placed a option stating that price will remain above this point right here, or this one right here, this one or this one. But as we see, price went below, but it still closed above this point, and it closed above this point as well. Definitely closed above this point. You would have gotten nervous. This is why I said in the beginning of the video that you have to be patient, because here many people would have gotten nervous when they see price go past this strike right here, thinking that price, would have stayed down below. So when I'm on the 5-minute chart, I typically like to trade the last 2 minutes of the binary, because it will give me, and more preferably the last minute of the 5-minute binary option, because it would be the last, it'll be the tell-all of what price is actually going to end, where price may actually end. I'll put it that way, may. So because of this bullish engulfing pattern, and then these these signal candlesticks right here, when this price action happened going to the upside, then I would definitely have been comfortable placing this trade stating that price would remain above here or here in this candle right here, which it did. It went all the way down below this and then came back up and closed above this point. So because it did that with bullish pressure, the signal candles, bullish pressure right here, even though this is a sell candle, this would have been another indication that after I wouldn't have placed this trade right here. I would have waited to see what this candle does. Then once this candle trades above this line yet again, just like this one did, then I would have been way comfortable stating that price would remain above this line in this candle right here. But then this candle comes back and it sells. Why? Because this candle closes below does not come up to or above this high, creating a lower high. So I would have placed an option stating that price would remain, I wouldn't have stated that price would remain below here. I would have stated that price would remain below here, or more than likely here, because as in previous videos, I see this as support and resistance. And this candle closed below this point. It touched this point. Therefore, it resisted this area. So I would have been comfortable with a sell to this point right here. So this sell happened and created a bearish engulfing candle, right? So now things are kind of like getting a little confused, and it's starting to look like it's going to be like a what you call consolidating moment, where price just moves side by side, because you clearly see it's not moving like this right here. It's not moving, you know, in an obvious direction. It's moving side by side, which means that it's getting to, it's at a point of where it has to make decision as to what direction that it's going to go. These candles will let you know this, what direction the price will go. So you just have to pay attention to how they operate. So here you have a bearish engulfing candle while price is going up. So with this bearish engulfing candle while price is going up, if you're going to take a trade, you take a trade stating that price will remain above, because it's not. Okay, so it's at resistance right here, and it's going down, but this is support. This has been already established as support from back here. So price does come in by a hair, breaks through, but you have bullish pressure right here. And you can use this too. This is resistance. So if you notice, I was getting ready to say this, but price came back. I would have taken a sell stating that when price came back below either one of these red candles, wicks, I would have placed a sell stating that price would remain below, like here or so. But here you got wick over wick, right? Price closed below this, but it remained above here. Wick over wick, meaning you got this wick to this wick right here on the buy side. When we were over here, we were on the sell side, but this is on the buy side. So because it's green and it's wick over wick, you're safe to assume, well, I would have felt way comfortable assuming that price was gonna go up, but because of it being a bearish engulfing candle, would stay below a certain point, go up but not above here. Just like with this wick over wick, you have wick over wick right here. So you got the previous high and the following low of two green candles, price action going up. So what did price do? It remained above this strike right here, above here. By the same token, with this wick over wick, with the two green candles right here, the high and then the following low, previous high and following low, you take a buy stating that price will remain above the previous low. That's what I do. Okay, so here you have it again, two green candles, wick over wick. All right, price comes back below the wick of 2 green candles. So I place an option stating again, this is the second support and resistance area to, well, the lowest support area to this wick. And then actually this is the lowest from here. This is the lowest because this is the high of this candle and this is the low. But I would be more safe using the low. And you notice the candle did not even come to that line. Not here. Neither the red one nor the green one. So that's the reason why I take these options. Here you have another green wick over wick. Take the high. You got the low. So here you made a higher high and then this high, but you have selling pressure here. So the focus would be right now, because it's closing below the resistance, we're still going to be focusing on selling. Going to still focus on selling. So let's see. Yeah, see? So you got to pay attention to the market. If the market is selling, then you sell. You want to take buys when you're at pullbacks. Yes, you can do that. But when the market is selling, you want to really be careful. So this, you want to take sells. This was a pin bar, which was a signal for direction change. You got the bearish engulfing candle, bearish engulfing candle, bearish engulfing candle, which are signals that price wants to continue going down. So it did go down below this point right here. And I'll do one more trade, which is sold below this point. We got wick over wick in that same area right here from before. It's respecting that same area. See, this is the high of that wick over wick, and this is the low of that wick over wick, which is the support and resistance. So I really just wanted to show you, you're seeing it right here. I'm not making this up. Practice your trades. Practice them. Write stuff down and write what you do down. Write what you see down, so that you can be successful when you start to go live. These are very easy strategies. There's a number of ways that you can see support and resistance. Whichever way that you choose, you stick with that, perfect it, and become successful with your trades. Here's wick over wick on the sell side. Right here. Wick over wick on the sell side. Price closed below. And look, I'm not making this stuff up. This is all, back test your stuff too. TradingView.com. You can only back test if you're on the free platform. You can only back test from the daily chart and above, daily, weekly, and monthly. Happy trading. Until the next video. Stay tuned.